的原因是因为你。
几聚散，日月沧桑尽变幻。那是多少红颜换一声长叹。谁曾巨鹿踏破了秦关，千里兵戈血染，终究也不过是风轻云淡。长枪策马平天下，此番诀别却为难。一身玉气一袭泪眼已潸然，与君共饮这杯中冷暖，西风彻夜回吹不断，醉里挑灯看见且无阑珊。台下一曲离乱，楚歌声四方，安悲此君饮间雪落凝寒霜。难舍一段过往，缘尽又何妨？与你魂归之处，便是苍茫。长枪策马平天下，此番诀别却为难。一身玉气一袭泪眼已潸然，与君共饮这杯中冷暖，西风彻夜回吹不断，醉里挑灯看见且无阑珊。台下一曲离乱，楚歌声四方，安悲此君饮间雪落凝寒霜。难舍一段过往，缘尽又何妨？与你魂归之处，便是苍茫。寒冰刀剑纷乱，折断了月光，江畔只剩孤舟，余生不思量。难舍一段过往，缘尽又何妨？与你来生共济山高水长。This 港口的忘却晚。
鸳鸯吧，就算再危险，然后在那一天，你会发现，不过是离别。所谓的世界的边缘，而我摇摇曳曳，情绪之烈，静止的眷恋。你说你很孤独，想重新照耀，是闪脱重复，怕来不及告别，又离你远了一点，又害怕留下满肚子的挂念，舍不得说出的再见，就陪在我身边，会不会变得遥远，就不会再有牵连。
这是千千万万万万千千个日夜，是我对你说不尽的思念。你的温柔与我无限的眷恋，哪怕岁月容颜已经改变。我有千千万万万万千千个心愿，穿越人海未见你一面。世界纷繁与我经不起了波澜，你的存在才是一切美好释然。在恍恍惚惚之间度过一年又一年，春去秋来多少遍，枫叶飘落了几片，潺潺流水也无言。我相信古老信念，也相信情比金坚，爱绝不是一场谣言。书中曾有的故事，真心会得到成全。提取梦里的碎片，温习着两人的画面，轻轻靠近你，有一点点，立刻就消失不见。这是千千万万万万千千个日夜，是我对你说不尽的思念。你的温柔与我无限的眷恋，哪怕岁月容颜已经改变。我有千千万万万万千 波澜，你的存在才是一切美好释然。提取梦里的碎片，温习着两人的画面，轻轻靠近你有一点点，立刻就消失不见。这是千千万万万万千千个日夜，是我对你说不尽的思念。你的温柔与我无限的眷恋，哪怕岁月容颜已经改变。我有千千万万万万千千个心愿，穿越人海为见你一面。世界纷繁与我经不起了波澜，你的存在才是一切美好。千千万万的日夜，是不尽的思念。你的温柔与我无限眷恋，哪怕岁月容颜已经改变。我有千千万万万万千千个心愿，穿越人海为见你一面。世界纷繁与我经不起了波澜，你的存在才是一切美好释然。
就把我爱意都掩埋，但你能清楚的明白，靠近我，然后别离开。可是难过的却不是回忆，因为回忆里哭泣的你。Cause you know， 爱就像大雨落下，怎么能让人不牵挂？过得好吗？想说的话，你能听到吗？没能陪你到最后，别再担心中迷途，怎么会忘掉你所有？
我还在这，默默地承受着，没有人附和。过了很久了吗？怎么会傻到等你回来？这算什么期待？话全都变苍白。那夜的银河，是你眼里的星辰，你还记得吗？最开始为你写的歌但是这里现在只是剩下我。
别走 ，Don't wanna say goodbye。好想对你的爱，永远都不能收回来。Baby, I would die for you， 你能清楚。陪你到最后，别再担心中迷途，怎么会忘掉你所有？
我还在这，默默地承受着，没有人附和。过了很久了吗？怎么会傻到等你回来？这算什么期待？话全都变苍白。那夜的银河，是你眼里的星辰，你还记得吗？最开始为你写的歌但是这里现在只是剩下我。
别走 ，Don't wanna say goodbye。好想对你的爱，永远都不能收回来。Baby, I would die for you， 你能清楚。Never for you, sad for you, cry for you, die
怎么说？视线斑驳，漫长的夜怎么过？紧紧拥抱的感觉就像发生在昨天，我拼尽全力实现对你的诺言。逃进漩涡，来不及难过，被吞没。Cause you know， 爱就像这雨落下，怎么能让你不牵挂？过得好吗？想说的话，你能知道吗？没能陪你到最后，面对太失踪旅途，怎么会忘掉你所有？没能陪你到最后，陪你到最后，给我的信仰，好手中残缺，原来你已不在，你已不在，你不在身边。
落叶无归根，但死不成仙。无所寄托，已无心流浪。你把红豆赠我，不如写我一首歌，落款你的名字，公正又好看。若把你比作歌，你便是那高山流水，家人伴舞，天地伴舞，绝显得美。若把你比作歌，歌写的我缠绵悱恻，汗水中声牵走我魂，绝显得美。落叶无归根，但死不成仙。有罪无心一
只偶尔听说，谁说关于他你又会主动？
Sie lädt zum Essen ein. Rund um die Welt. Mit ihr beginnt Urlaub nicht erst am Ziel, sondern schon auf dem Weg dorthin. Sie ist überall auf der Welt zu Hause und immer da, wenn man sie braucht. Die Platinum Card von American Express. Gemacht fürs Leben.
AI is changing the game for app development. Firebase is here to help. Firebase offers a platform designed to support you throughout your app and business's journey, so you can rapidly build, release, monitor, and optimize AI-powered experiences users love. Get to market quickly and securely with Firebase.
Under the Tuscan sun, life's a golden hue. Cobblestones echo under sandals new. A Vespa hums its tune past piazzas wide. Gelato drips little joys they collide. Beach umbrellas flutter in the gentle breeze. Elder men play cards under olive trees. The past lingers here like a fine red wine. History and heartache dance divine. Old money whispers through seaside air. Timeless charm, you feel it everywhere. A strum of the strings, soft sweet refrain. An Italian summer dressed in memory's chain. Mandolins sigh a song of distant years. Bossa beats mingle among laughter and tears. The jazz of the soul with a Roman view. Every note feels as if it's just for you. The sea finds its rhythm on golden sand. An old man hums gestures with his hand. Amore he croons to the stars above. Every corner here speaks of endless love. Old money whispers through seaside air. Timeless charm, you feel it everywhere. Strings embrace the wind, soft sweet refrain. An Italian summer dressed in memory's chain.
Tusney sun so bright, the vineyards whisper through the light. An old man hums with a heart so vast, a tune that echoes from the past. Limestone streets guide the feet that roam. The warm piazza's a timeless home. A melody drifts where the olives sway. Memories linger with each sun ray. Oh, the old money glow, so serene, where summer rolls like a sepia dream. In whisper winds and golden air, romance dances shadows stretch with an ageless grace. This Italian summer, our sacred place. A glass of wine with cicadas near, old tales told in tones sincere. The bossa nova sways so slow, where past and present gently flow.
Mulai dengan solusi Google Cloud lalu akses langsung ke kredit gratis untuk seluruh penggunaan produk. Sebagai pengguna baru, Anda akan dapat kredit $300.
Oh, the old money glow, so divine, where the years blend like treasured wine, under the stars in timeless embrace. This summer sings with eternal grace. Under the Tuscany sun so bright, the vineyards whisper through the light. An old man hums with a heart so vast, a tune that echoes from the past. Limestone streets guide the feet that roam through warm piazzas, a timeless home. A melody drifts where the olives sway. Memories linger with each sun ray. Oh, the old money glow, so serene, where summer rolls like a sepia dream, in whispered winds and golden air. Romance dances everywhere. Mandolin strum in a quiet trance. The sea reflects a moonlight glance. Shadows stretch with an ageless grace. This Italian summer, our sacred place. A glass of wine with cicadas near, old tales told in tones sincere. The bossa nova sways so slow, where past and present gently flow. Oh, the old money glow, so divine, where the years blend like treasured wine, under the stars in timeless embrace. This summer sings with eternal grace.
Under the lazy Tuscan glow, the sun sets soft, the breezes flow, a villa hums with whispers sweet, where past.
Are you also tired of boring helmets? We've created Tough Helmets, the first customizable helmet for riding on a motorcycle, mopeds, scooters, faster scooters, elevators, and even on a Solix from the 60s. We've developed a product, designed our brand identity, and our packaging. We did product shootings. We've had countless pizza nights.
And present gently meet. Cypress trees sway a faint ballet. Wine kisses lips, night turns to day. Shadows dance on cobbled stone, a world of love we've always known. Old money's charm in the summer air, romance lingers everywhere. Crooning softly, memories stay, dolce vita, come what may. Mandolins play in the distance wide, a melody where secrets hide. Golden fountains softly gleam, like treasures birthed from some old dream. Oh, time moves slow in this embrace, a vintage spell we can't erase. Satin moonlight bathes the scene, a postcard life serene, pristine. Old money's charm in the summer air, romance lingers everywhere. Crooning softly, memories stay, dolce vita, come what may. Under the lazy Tuscan glow, the sunset's soft, the breezes flow. A villa hums with whispers sweet, where past and present gently meet. Cypress trees sway a faint ballet, wine kisses lips, night turns to day. Shadows dance on cobbled stone, a world of love we've always known. Old money's charm in the summer air, romance lingers everywhere. Crooning softly, memories stay, dolce vita, come what may. Mandolins play in the distance wide, a melody where secrets hide. Golden fountains softly gleam, like treasures birthed from some old dream. Oh, time moves slow in this embrace, a vintage spell we can't erase. Satin moonlight bathes the scene, a postcard life serene, pristine. Old money's charm in the summer air, romance lingers everywhere. Crooning softly, memories stay, dolce vita, come what may.
under an ancient sunlit dome, where olive branches call me home. The sea is blue, the hills are gold, a summer's tale of treasures old. Cypress shadows stretch so long, a villa whispers its quiet song through cobblestone and frescoed wall. Her echoes linger, proud and small. Oh, Italia, in your warm embrace, time strolls by at a lazy pace. A glass of wine and hearts aglow in your old charm, where dreams flow slow. The accordion hums a wistful tune, the mandolin dances beneath the moon. Every breeze smells of lemon trees in this eternal memory. The years
bill in hand. If you move to Oracle Cloud Infrastructure, this is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Right now, the Dow Jones Industrial Average up 291 points. The S&P 500 up 44 points. That's a record. 6271 on the index. NASDAQ Composite Index up 189 points. That's a record. The NASDAQ 100 up 215 points. That's a record. The economy adding 147,000 jobs in June. The unemployment rate falling to 4.1%. And as a result, traders are now betting on no rate cut from the Fed for this month. The bond market selling off in price, 2-year, which is more policy reactive. That is up 10 points as the price goes down, so we're at 389 on the 2-year. Deal news, New York-based Olo. This is the platform for restaurants that's being acquired by Tomo Bravo. A $10.25 per share in cash. Olo shares up right now close to 14%. Silicon Valley-based Cadence Design, ticker symbol CDNS, and Synopsys among the beneficiaries after the U.S. lifted the export license requirements for chip design software sales in China. Datadog, that's going to replace Juniper Networks in the S&P 500. This is prior to the opening of trading on July 9th. Datadog, that is up 12% right now. Foot traffic at United Parks and Resorts' 12 U.S. locations has fallen an estimated 9.6% on average over the 30 days through the end of June, compared to with a 1.3% drop in the same period last year. This is according to analysis of cell phone mobility data. This is the company that runs SeaWorld, Sesame Place, and Busch Gardens. Amusement park attendance is off to the worst start.
Really?
For its busiest period of the year in the post-pandemic era. And they're blaming, in large part, bad weather across the country. United Park shares, they are down about 0.5%. And we check the numbers and the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabella Hall.
John Tucker, thank you so much. We appreciate that. Isabel Lee and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well here. Well, if you went to sleep New Year's Eve last year, you woke up today, you're like, oh boy, the first half of the year up 5-6%. That's pretty tame. That's pretty solid. We'll take that. But what you didn't see is all the angst and agita to get there with a 20% decline and then a retrenchment or retracement of that decline here to get you to where we are today. But Margaret Patel, she lived it every day. She's a senior portfolio manager at Allspring Global Investments. Margie, if you look back on the first half of the year and you think about some of the volatility that we saw in the financial markets, how does that frame maybe your outlook for the second half of this year?
Well, I think the first half volatility was just a correction that was a little bit overdue because the market had done so well in 24. But I think now when you look at the fundamentals, it says that the economy is moving ahead slowly. The Fed is basically stable and leaning towards cutting rates. So it says we should have more of the same in the second half. In other words, probably it looks like we're going to be aiming at least at the low double-digit total returns for the year.
You wrote in your note that markets have absorbed a lot of negative news and uncertainty so far in 2025. Doesn't that make you think that markets will also be more vulnerable to negative surprises at this point? Like, what is exactly priced in?
Yeah, no, I don't think the market is very vulnerable. The most important reason is what's the Fed doing? Is the Fed slamming on the brakes, raising short-term interest rates, pulling back on liquidity? And the answer is no. The Fed is leaning towards neutrality to maybe a couple 25 basis point cuts. So I think as long as you have a neutral to positive Fed backdrop, there's really very, very limited bad news we can have in the economy. Most sectors look pretty well balanced. And if we see a cut in short rates, which I think the market is telegraphing is really overdue on the Fed's part, we could see stock prices move higher just because price earnings ratios respond to lower short-term interest rates by expanding, and see some PE expansion in addition to pretty good earnings of 8, 10, 12% average.
Margie, technology has been a sector that's led this market forever. There are a lot of investors who have never been in this market without tech being the leader here. Is that still the case going forward, do you think?
Yes, I think so, because when you look at the other sectors, tech still shows like it's one of the sectors likely to have the highest earnings growth, highest growth in cash flow, really global demand and product innovation, which is very important in that sector to expand markets. So I think it's going to continue to be a leading sector. And we'd like to see other sectors come in and have earnings growth even faster, but it's pretty hard to see that. So we think tech is really going to be one of the anchors in a portfolio looking at the better performing sectors.
What about earnings season? It begins mid this month. I can't believe it's already July, and we'll definitely hear more about how companies are navigating uncertainty, tariffs. What are you looking out for?
I think companies have done a pretty good job about telegraphing how they'll be affected by tariffs and adjusting where their business is so they won't be as vulnerable. And a lot about the tariffs is still rather unknown as far as the impact on companies and how big it'll be for different companies and products. So we think when you look at profitability of U.S. companies, it really looks pretty good. We've had earnings in the chugging along, say at 8, 10, 12% for the last few quarters, even though we've had low growth, or even the last quarter we actually had negative 50 basis points GDP growth, yet still we had corporate earnings looking pretty good. So I think you have to be pretty optimistic about companies continuing to expand their earnings, market continuing to go up. And I think, frankly, a lot of people really didn't get on board the market when the Fed began to cut rates. They were attracted to the very, very high short rates. So I think there's actually still a lot of money on the sidelines, still a lot of liquidity that could actually power equities a lot higher.
How about on the fixed income side, Margie? I mean, I'm looking at the 2-year Treasury, almost 3.9% here. We have it up 9 basis points today, so move higher in yields for the bond market. Do you stick with the Treasuries? If so, where? Or do you take some credit risk?
Well, I think the treasuries are really basically, say, in the 10-year treasury, which is what I look at, more or less in a trading range, say 4 to 4.5. But I think what you're seeing in the 2-year is really saying the market thinks that a lower Fed funds rate would be appropriate, and that's what I think we'll see. When you look at, say, the high yield market, you've seen spreads return to pretty much near their narrows of the last few years, but that's simply because the fundamentals are so good. Defaults are actually below 2% right now. There's still a lot of money who would like income-oriented investments. It yields, say, 2 to 3 percentage points more than treasuries. So I think high yield is still very attractive, more moderate in total return than we may like to see. Maybe we're looking at a coupon of, say, 5.5 to 7.5%, and 1 or 2% of capital appreciation. So that says to me, mid to high single digits for high yield, better than treasuries. So we think that corporate bonds are a pretty attractive sector for the extra yield.
Always great stuff. Thank you so much, Margie. Really appreciate it. Margie Patel, Senior Portfolio Manager, Allspring Global Investments up there in Boston, Mass, which in the warm weather, one of my favorite towns anywhere is Boston, with the Boston Harbor, all the boats. It's just awesome up there. Let's get back down to Washington, D.C. Mike Dorning, Bloomberg News Capital Influence Deputy Team Leader. I'm not sure what that is, but I know he covers all the stuff going on in Washington. Mike, where are we in terms of getting something signed here today? Where are we in this process?
So basically, the Republican leaders and President Trump have putting pressure on enough Republicans so they can pass this bill. They're just waiting for Hakeem Jeffries to finish his speech denouncing the bill. Each congressional leader can speak for an unlimited amount of time, but they can't go to the bathroom while they're speaking. So you're kind of limited by biology and how long you can go. But he's making his case. He's making it at great length and vigorously. But once he's finished talking, then the Republicans will vote. They believe they have the votes, and then it will pass and go to President Trump. He's planning on signing it on July 4th.
Absolutely. I'm just seeing here, Hakeem Jeffries started speaking this morning at 4:54 a.m. East Coast time, and as Mike mentioned, still speaking, Isabel.
The most read story is actually this story. The U.S. House nears passage of Trump's tax bill after all-nighter. If you go to READ, can you remind us again, Mike, what the main tension of this bill is? What is taking so long? We have President Donald Trump tweeting that. What are you trying to prove? What are Republicans waiting for?
So the big criticism Democrats have of this is they sort of feel like it's a Robin Hood in reverse, that you're taking from poor people to give to rich people. Most of the tax cuts primarily benefit more well-off people, and a lot of the social safety net services they're cutting cover lower income people, and they don't get much in the way of tax breaks. Among Republicans, though, I mean, there are narrow Republican majorities in both houses, and the president's Republican. The Republicans back this. They feel like the big tax cut will promote economic growth. Among the Republicans, the tensions are some of the conservatives wanted deeper cuts in spending because they're going to have like a giant $3 trillion plus deficit as a result of this bill on top of the other deficits, whereas some of the Republican moderates from swing state districts didn't want to cut Medicaid and food stamps as much as this bill cuts them.
I have a question here. Matt from Westchester writes in, what's the SALT tax language? Do we have any finalization there?
That's sort of news you can use if you live in New York, New Jersey, or California, and that's all final. That's settled. The limit on the SALT tax goes up from $10,000 to $40,000 for the next 5 years. Then it goes back down to $10,000 for the remainder of the time.
How much pomp and circumstance are we going to see on July 4 when and if President Donald Trump signs this, given that he's really drummed up this deadline of his?
The White House hasn't given their plans for the signing, but you can bet that President Trump, this is his signature main legislative wish. This is all he's really asking Congress for this whole 2 years. And this is his big ask. You can imagine he's a real estate promoter. He is not shy about promoting success, that he will have an over-the-top celebration for this.
All right. Mike Dorning, thank you so much. We appreciate that. Mike Dorning, Bloomberg News. He covers all Washington, D.C., down there in D.C. Hakeem Jeffries, he'll have to keep speaking until around 1:30 p.m. East Coast time if he wants to set the record for a House floor speech. Then Republican leader Kevin McCarthy, Republican from California, set that mark by speaking for 8 hours and 32 minutes in opposition to then President Joe Biden's signature Build Back Better legislation in 2021.
And I believe Paul Sweeney has set the record for staying in the studio without a bathroom break.
Without a bathroom break. So, I mean, I guess this happens, I guess, is the way to think about it.
Yes, but it's unbelievable. 8 hours is too long.
Yeah, so, but we always say, hey, where are the Democrats? Well, I guess they're making a little bit of a stand here today, so we'll keep an eye on that. But again, expected this bill will pass, and then President Trump says that he will sign it tomorrow, July 4th. How about that? S&P up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash brought to you by IBKR. Will the median new home sales price exceed $450,000 in June 2025? The yes was recently at 5%. Trade your prediction with the IBKR Forecast Trader at ibkr.com/forecast. Last trading day for this contract is July 24th. U.S. job growth exceeding expectations for the month of June, with payrolls increasing 147,000. This was driven by a jump in state and local government employment, particularly in education. Now, with a solid report like this, traders have all but eliminated the chances of a Fed rate cut for this month. Right now, we have the S&P 500 47 points higher at 6275. That's a record. The Dow Jones Industrial Average up 363 points. The NASDAQ 100, another record here, up 211 points. That's up almost 1%. The two-year yield, that's climbing 9 basis points higher right now. The yield's higher, 387 on the more policy-reactive two-year. Municipal bond news. The Toms River Regional School District in New Jersey threatening to file for bankruptcy. They cite years of state funding cuts. They've authorized the district staff to consult with bankruptcy attorneys. The Toms River School District boasts an investment-grade credit rating by S&P Global Ratings. The district has about $135 million of municipal bond debt outstanding. And it kind of reeks of like a stunt.
You think so?
Yeah.
It's a big district. I think they have 2 high schools, Toms River North and South.
It is big. Oh,
good,
because
good Little League baseball.
Oh, that's for sure.
That's for sure. They win
multiple times have they gone to the Little League World Series.
Right.
And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. And that's your Bloomberg Business Flash. Isabel and Paul.
Isabel has no idea what we're talking about. Toms River, New Jersey. All right.
During the commercial break, we were discussing why fireworks on July 4th, Independence Day, which initially was ratified July 2nd by the Continental Congress, and then by resolution made to July 4th. But anyway, John Adams wrote to Abigail Adams in a letter that this should be celebrated by succeeding generations with pomp and parade, games, sports, guns, bells, bonfires, and illuminations from one end of this continent to the other. So
solid.
Very nice.
We have him to thank, and we're all set for July 4th this weekend. The weather's going to be great here in the East Coast. Isabel Lee, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live as well on YouTube. Donald Trump is set to impose sweeping tariffs on imports from countries around the world from July 9th. It marks the end of his 90-day pause and could result in the most disruptive shift in global trade in a century. To get some more reporting on this, we go to Brendan Murray, global trade editor for Bloomberg News. He's in our London bureau. Brendan, if you step back in a 30,000-foot level, how should we be thinking about tariffs as we come up to this July 9th date?
Well, what we have are about 20 countries that are in active talks with the Trump administration. And so far, we've gotten a glimpse of 2 or 3 of those deals. The first one was with the UK. And they negotiated down some of their tariffs. President Trump's advisors negotiated a sort of truce with China. And then yesterday, the president laid out the broad contours of this deal with Vietnam, which has, not a giant economy, but it has become a pretty big exporter to the U.S. over the past several years. And so the president said he's going to put a 20% tariff on imports of Vietnamese goods, and then a 40% tariff on goods that come through Vietnam that have been transshipped there. Basically, Vietnam's a place where China ships a lot of its goods, sticks a label on it and says made in Vietnam, and therefore gets around some of Trump's tariffs on China. So they're trying to really crack down on this hub in Southeast Asia for goods that are transshipped from China through Vietnam. and this is one way they're going to do it. But we're expecting a number of other deals to be rolled out in between now and next Wednesday, July 9th, and we'll see some of the countries that we think are close are India, Taiwan, the European Union. They're sounding more optimistic about a deal, which would be a big one. The transatlantic trade relationship is huge, and so, but there'll be other ones with smaller countries too. South Korea seems to be kind of fading from the front of the pack. Japan looks unlikely to be able to come through with something comprehensive in the next couple days. But we're expecting these deals to kind of trickle out over the next 5 days.
There are definitely too many things at play. I wonder, do you think that the president will push back the July 9 deadline? We have Trump and administration officials recently indicating that the deadline might be pushed back, but Trump did tell reporters earlier this week that he wasn't planning on an extension.
Yeah, he's saying he's trying to maintain some flexibility there. I think basically the countries are going to fall into three main buckets. They're going to get their deal, like Vietnam is getting. They're going to get a delay. They're going to get more time to negotiate. Maybe they agree on a few vague things, and then they get another 3 months or another 6 months. And then there's going to be the third group of countries that are just going to get handed their tariff rate, and there won't be any negotiation over it at all, according to Trump administration officials. So who knows how those 20 or 25 countries are going to divide up into those three groups, but that's basically where each are going to fall.
Hey, Brendan, how about our two of our bigger trading partners and our neighbors here, Mexico and Canada? It sounds like, I mean, what's going to happen there?
Yeah, they're on separate tracks. They are of course, partners in the USMCA North American trade agreement. So they are not faced with these so-called reciprocal tariffs that President Trump announced on April 2nd. So there was a lot of headlines over this past week about President Trump threatened to call off talks with Canada because of their digital services tax. Canada lifted that tax and said, "Fine, let's get to the negotiating table." So those talks are happening at the same time. Mexico is trying to get some exemptions on the steel and aluminum and the auto tariffs that they face from their goods entering the U.S. So those talks are happening in tandem with all of these others, but they're on a different they're on different subjects, and they're not subject to this particular deadline of July 9th.
We have White House officials really framing this announcement and subsequent pause as a negotiating tactic and an art of the deal in action. Do you sense from your sources that there's tariff fatigue? I mean, it's been 3 months and there's just really little clarity, and we have just 3 days till, 3 working days until the deadline, and
yeah,
it seems like a lot is still up in the air.
Yeah, I think a lot of between investors, markets who have been keeping an eye on this. As long as these tariffs don't come in at the very high rates that the president announced 3 months ago, then it's just kind of something that companies can absorb, governments can accept and move on, and adjust, and supply chains will adjust to them. That there's the initial fear, as you might remember, when those first very high rates came out. Markets sold off. We had a very quick turnaround from the Trump administration. They walked back those tariffs. So I think there's just a realization and an acceptance generally that this is just the way the world is going to be from here forward. That the U.S. is going to put a 10% tariff, at least a 10% tariff on all of its imports, and then it's got all these sectoral tariffs that it's going to impose on steel, aluminum, cars, pharmaceuticals, semiconductors, all sorts of other industries that are gonna face these tariffs. And of course, there are court challenges to the reciprocal tariffs that still need to be worked out. So those could be struck down at some stage. And so there's just a lot of uncertainty about how high these tariffs are gonna come in at, and how long and durable they're gonna be.
Brendan, thanks so much for joining us. Your reporting is really, really helpful because we're all trying to figure out kind of where we are in the world of tariffs. Brendan Murray, global trade editor for Bloomberg News. He's based in our London bureau, Queen Victoria Street, right in the city of London, right across the street around the corner from the Bank of England. So it doesn't get any more City of London than that. Giving us the latest here. Markets on a trade shortened day, as Isabel was mentioning, the markets close at 1 p.m. Wall Street time. And we are higher here today. We got the S&P up about 0.8%. The Dow's up 375 points. That's about 0.8% as well. And the Nasdaq's up 180 points. That's about 0.9%. So pretty solid performance there. The VIX comes in now 16.4. Yields are higher. Point out the 10-year Treasury is 4.33%. That's 5 basis points higher. The 2-year is up about 9 basis points, 3.88%. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, folks, if you're sitting in front of a Bloomberg terminal, it's ECO Go, Eco Go, and it gives you all the economic data and a calendar when it gets released, and it just shows you what's, so you can put it all in one spot, and it is just jam-packed today. So lots to go from, including being the lead is the non-farm payrolls came in a little bit better than expected. The bond market's certainly taking notice here. I got the front end of the curve up 9 basis points on the 2-year, so the bond market cares, which means Ira Jersey cares. Ira Jersey, chief U.S. interest rate strategist, Bloomberg Intelligence, ensconced in that Princeton office. I keep telling him we have a nice office here in New York, but it's not budging at all. My man is comfortable down there, and I respect that. Hey, Ira, what did you and what did your bond market take away from some of all this economic data we had today, including ISM, which came in a little bit better than expected as well?
Yeah, well, I think in particular, people were concentrating on that unemployment rate, as well as the fact that you didn't have a you had a slowdown in private payrolls, but you didn't have as significant a slowdown in aggregate payrolls. And those were the things that people were worried about. So the reason why the 2-year yield is off 9 basis points right now is basically we were starting to price in for the chance of a July rate cut. And that's basically off the table at this point. So September is now priced about 3/4 of a 75% chance of a September cut. I still think that's probably going to be a little bit too early, but nonetheless, taking out July meant 9 basis points on twos, and that's exactly what we've seen.
We have Gregory Farinello of Amerivet Securities saying the Fed will take the summer off. It's really a surprising report. To your point, rate cuts for July basically punch to zero. September is kind of iffy. How did this shape your view moving forward? Did you immediately have to write a report? Did you and your team really were surprised and had to reshape or re-angle your outlook?
Yeah, it was. I mean, I guess a little bit. The consensus for the unemployment rate was for it to go up 1/10. Instead, it went down 1/10, and I think that was the single biggest surprise. We don't. Our colleagues over at Bloomberg Economics, they own that unemployment call. But I think it didn't really reshape our views very much at all, because we've been suggesting that we'll continue to kind of muddle along with okay employment situation with this overhang of tariffs, keeping the Fed on hold probably until at least the October meeting, which happens in very late October. So we're looking at the fourth quarter, in our view, before the Federal Reserve makes any moves at all, or we'll get enough data. I think the market is more sensitive to data now, thinking that, they're going to change on a dime. One bad data print means that the Federal Reserve may go or not. But that's quite frankly not the case. And one of the necessary conditions for the Fed to cut rates is a weakening employment situation. And while it's weakening, it's not getting weaker, right? So it's we're not yet at a point where the Fed will feel compelled to cut because of the job situation.
So to the extent that the market now has maybe a better feel on the labor market, and maybe the Fed has a better feel on the labor market with today's data, focus can then maybe move to inflation. What are the expectations in the market here? We haven't really seen any inflation creep into this market of any note here, which some people had feared with the tariffs and so on. What's the view there?
Yeah, well, there's a couple of things going on. Underlying there were some, when you look at the May data, there were some sectors that did see a little bit of an uptick in inflation in the goods sector, but that was offset in large part, and will be offset again, by lower energy prices, and as well as rents that are starting to flow through. Keep in mind, when we talk about rents and owner's equivalent rent, which is the housing component of the consumer price index, that will continue to fall just naturally, because it takes a long time for 12 months basically, right, for rents to be adjusted to these new prices. So you're going to wind up seeing, yes, prices will increase, but they're increasing at a slower pace. That means that inflation is falling, and I think we're in an environment where, okay, goods prices go up a little, but with energy prices and housing prices starting to come down, the only variable left is, what are service prices doing? And in today's report, you saw that wages in the services sector were a little bit lower month on month in June than they were in May. So, I agree with you, Paul. Like, we haven't seen inflation and probably won't.
Interesting. All right, folks. Ira Jersey, we know him as one of the leading voices on U.S. interest rates in global Wall Street, but he's also our soccer correspondent as well. Ira, can you explain to me Club World Cup? Where did that come from?
It was the attempt by FIFA for a money grab, and quite frankly, I think is underwhelmed. There's in the summer, you're kind of used to seeing Major League Soccer, and then some international tournaments like the Women's Euros just kicked off. That's all the national women's teams in Europe kicking off, and we have the Gold Cup here in North America, where we just saw last night Guatemala lose to the United States, and so now we're set up for a final in this weekend. The Club World Cup is an idea that maybe some people will like, but it's really underwhelmed. The times of games have been really poor. It hasn't been good for the health of some players playing in summer heat in the United States at noon. I'm not a huge fan of the tournament so far, the way it's been run.
Yeah, kind of was there, but I didn't really know it was there, and I'm like, where did that come from? So, all right, now I'm a little bit more clear. Ira Jersey, he gives you what you need to know on the interest rate space. He gives you what you need to know about global soccer. He tells me what I need to pay attention to and what I don't, so we appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence, coming to us from our Princeton office. And again, we're holding on to those gains here today with the S&P up 0.8%. The market kind of feels like good news is good news. That's what you said earlier, right? Good news is good news today.
Good news is good news, and especially ahead of a long weekend.
Very good. All right, Isabel Lee, Paul Sweeney, we've got another hour coming up for you. Remember, trading concludes today at 1 p.m., a little bit earlier, so folks can get out for the 4th of July long weekend. That's a good and wonderful thing. We'll have more coming up this evening.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, Rashmi Basu, he's a Bloomberg News credit reporter at J.P. Morgan's risky 5-day dash to help Warner Brothers split in two. This is something I want to talk about because there's a lot of debt on that Warner Brothers Discovery company. Who's going to get the debt? Who's going to service it? And who's going to get a better deal? That's going to be a good stuff. Nancy Tengler, CEO and CIO of Laffer Tengler Investments, get her thoughts on these markets going forward. Then Anurag Rana, he's a technology dude for Bloomberg Intelligence, Microsoft, Oracle, some big news for these big tech companies. And the real question is, what's the outlook for the AI story? Is it still the driver for global technology? And then it is Thursday, which means we talk to one B. Ritholtz, Barry Ritholtz, host of Ritholtz, the Masters in Business podcast. He's also got a day job as a portfolio manager. So we love talking to Barry Ritholtz, get his thoughts on these markets. But let's kick it all off with Mr. Charlie Pellet.
Hi, thank you very much. And here's what's going on. We are at the best level of the day, Jobs Thursday, ahead of a long holiday weekend for a lot of people. Right now, we have got the S&P. Let's begin there, up 49.6276. That is a gain of 0.8%. And worth pointing out, as we trade at a record, that year to date, we're looking at an advance of 6.7% on the S&P 500 index mid-year. We've got the Dow up 358, now up 0.8%. NASDAQ up 197. That is an advance of 1%. Our Mag 7 index up by 0.9%. 10-year 4.33% with the 2-year 3.87%. Gold down $33 the ounce, lower by 1%, 33.23 where we stand now. And West Texas Intermediate crude down 1.1%, 66.71 a barrel on WTI. The Institute for Supply Management's index of services rose to 50.8 in June, indicating a slight expansion, driven by a pickup in business activity and bookings. Steve Miller is chair of the Business Survey Committee at ISM. He was interviewed right here last hour on Bloomberg Intelligence.
Really, the great news is that even with the employment index going down a bit and with the supplier delivery index going down a bit, the new orders and the overall business activity indexes were up enough to bring the whole index above 50 again. So we view that, even with all the uncertainty right now, as a very good sign.
Steve Miller of ISM, by the way, you can hear more of the conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. Some of the other stories that we're following for you at this hour, the software company Datadog will be added to the S&P 500 index next week, replacing Juniper Networks after its recent acquisition by Hewlett-Packard Enterprise. Datadog up now by 13.5%. HPE, little changed on the day, down 0.1%. And that is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Isabel Lee and Paul Sweeney, we are live here in our Bloomberg Interactive Brokers studio in our Midtown Manhattan headquarters, 58th Street, Lexington Avenue. We're also streaming live on YouTube as well, so check us out there as well. As Charlie's just reporting, a broad move higher in the equity indexes. Let's see where some individual stock names are moving. We go to Christine Aquino, Bloomberg News managing editor. I just learned what that means in the world of journalism, and that's a big thing. So now I'll be on better behavior. Christine, what are you looking at here today?
Oh, Paul. Well, let's take a look at Cadence, shall we? That's ticker CDNS. And it is one of the stocks that are benefiting from this new development in U.S.-China relationship, which is basically that the U.S. is now lifting its export license requirements for chip design software shares in China. Really what this means is that these companies that have been supplying design technology to chip companies now once again free to do business in China. And, you know, we talked about Synopsys benefiting from this earlier, but for Cadence specifically, this is important because Bloomberg Intelligence was just warning earlier this week that, you know, its sales in China, which represent about 11% of total sales, they rose at a 15% annualized rate in 2021 to 2024, but then that dropped to just 12% of revenue in 2024. And so had this been the development not been a positive one, then that would have been problematic for this particular company.
What about DuPont, ticker DD? What's going on there?
That's right, Isabel. So DuPont also enjoying an update today. Shares currently up just 1.3% at the moment. And so we have the Financial Times reporting that a number of private equity groups, including Advent International and Platinum Equity, are vying to buy $2 billion worth of DuPont's assets, including the Kevlar bulletproof brand. Is that something you're familiar with, Paul?
Yeah, the body armor stuff.
That's right.
Yep.
Yeah. So that's one of the assets that these private equity companies are particularly interested in. Bids are expected to be submitted this month, though FT also reporting, though, that DuPont might still opt to keep those brands and other bidders could emerge. But so far, these two are the front runners.
Saw some analyst upgrades as well, Citi and Argus, and taking price targets up and all that kind of stuff.
Absolutely,
so the streets,
yeah.
Some street action out there as well. All right, how about Newmont Gold?
Newmont Gold, ticker NEM. So that's on the downside at the moment. Shares currently down just a little bit, 0.4%. And, you know, we did get a UBS target increase. So now they're looking at $68 from 60 previously. So that's about a 13% increase from its current trading price. But, you know, they're reporting results later this month. And the warning from Bloomberg Intelligence is that second quarter EBITDA could decline modestly. And, you know, gold's price has been jumping, but that might not be enough to offset the drop in sales. But on the upside, it does have solid performance in some of its core assets, and that could lift its gold output, which means that, you know, the current consensus for EBITDA around $100 to $200 million might be a little low. So we'll see. Later this month, they're going to be reporting.
All right, good stuff there. We appreciate that. Christine Aquino, managing editor in Bloomberg News. Stock Pickers Podcast. You can find that anywhere you get your podcast. It's a good 5-minute review of the movers and shakers on Wall Street, and we update that several times a day. Stock Pickers Podcast. Get that anywhere you get your podcast. All right, right now, let's go right now to Kate Duchesne, CEO of RGP, Resources Connection. Get her thoughts about this jobs number. It seems, Kate, that the U.S. labor market is still pretty solid. What did you make of today's employment data?
Yeah, I had the same reaction to it. It's staying very resilient. I do think we see a lot of particular sector hiring, which we expected around healthcare or leisure and hospitality, and also an uptick in local and state government. But, you know, it's staying resilient, more resilient than anybody anticipated here.
That's definitely right. So it confirms a resilient U.S. labor market, at least for now. But the signs of weakness are there in some leading indicators. What then are the headwinds that you are seeing? Are there any downside risks in the horizon?
Well, I think there are, if you don't have the right skill set that you're bringing to market. So, you know, our firm is a professional services firm. So we build talent pools that have really specialized skills. So you need to make sure, if you're in the labor market, that those skills match what the trending initiatives are. You know, what we're seeing in our client base are skills around digital transformation, operating efficiency initiatives, the potential for exploring and implementing AI. So I think what's really important here is for the labor market to ensure that you have the right skills. And if you don't, upskilling is what you have to be focused on.
Kay, how's the labor market kind of shook out in terms of where people work? Do they work from home? Do they work remotely? Do they have a hybrid? Do they have to be in the office? Is there any kind of new normal that you think is out there, or is it still a little bit in flux?
I think I don't think it's in flux. I think the new normal is still hybrid. You know, we track some headlines from big organizations that are demanding return to work. But what we're finding in the client base, and we have roughly 2,000 clients globally, is that hybrid is still the name of the game. Probably 3 days a week in the office and then 2 remote. And that seems to be the prevalence across our client base, which is largely Fortune 500 and large middle market.
What are you hearing from small and middle market businesses? Do they have confidence in the outlook of the economy? We know there's a recent rise in consumer sentiment, but are you seeing the same on your end?
Yeah. So we just did a survey of CFOs in our network, and 60% of them reported confidence in the next 12 months in the financial position of their organizations and the ability to invest. And something I think we talked about last time I was on your show is learning to deal with uncertainty and continuing to move forward even in a very disrupted environment. And I think that's what we're seeing a little bit today, is that companies are deciding that we still have to move forward and you can't stay locked down or paralyzed forever. And that is what we're seeing in our client base.
Kate, we've heard an argument as it relates to the U.S. labor market that if you've got a job, keep it, because it's maybe a little bit more difficult to find a new job here. Is that your understanding, your lay of the land?
I think that's true. I mean, we are not seeing people move around like the post-COVID days, that's for sure. It's taking longer. I mean, I will say, even though I remain more optimistic that we have to keep moving forward and that work has to get done, decision-making is taking longer for sure, and that is certainly impacted in the hiring trends as well.
Kate, thank you so much for joining us. Really appreciate it. Kate Duchesne, she's the CEO of Resources Connection. RGP is the company that you work for, Resources Connection. So talking about the U.S. jobless market and the labor market, again, came in a little bit better than expected. And that kind of goes to, I think, what we're hearing from most employers out there, which is we're still hanging on to our employees here. I don't know, we used to call it employee hoarding back in the day, which is a term I'd never heard earlier in the pandemic, but companies found it very hard to kind of rehire workers that they had let go. So they're going to keep their employees there. So that still seems to be a thing. One of the stories I really enjoyed the most on the Bloomberg terminal today is about a company I used to cover for years and years and years and did a lot of work with, Warner Brothers Discovery. This was a company two famed media companies put together a few years ago to get scale to compete, but they probably don't have enough scale even there. So now they are, and the stock has underperformed since putting those two companies together. So now they're doing what I would have recommended as a banker, which is let's take them apart again. But part of it is you got to deal with the balance sheet. There's a lot of debt there for this company, so you have to figure out a way to deal with that. Reshmi Basu joins us here, Bloomberg News, a credit reporter. Reshmi, I loved your story here today. Talk to us about what J.P. Morgan, the banker for Warner Brothers Discovery, what deal did they kind of craft to deal with the debt problem at Warner Brothers Discovery before they could even split the company apart?
In order for the split to happen, J.P. Morgan needed to do a restructuring of the debt stack. So basically what they did is they provided $17.5 billion bridge, which is biggest bridge, massive. Stud. And they used those funds to take out existing debt. They cut about $3.2 billion of $32.5 billion of outstanding debt. And it was just a deal that really used a lot of distressed restructuring tools and applied it to an investment grade company, something we've never seen before.
Can you talk about how this has the potential to set a new precedent for companies, especially those in investment grade, to just renegotiate their debt moving forward?
So this kind of introduces a new playbook to the investment grade community in that it was an unbelievably short consent. It was only 5 days.
Yeah.
And it was even shorter for some funds because they had to turn in their consents within 3 days, given the processing times, like they were depending on slower software, et cetera. So really this deal prevented lenders from being able to organize a group and fight for better terms.
How did they get away with that? Yeah. I mean, if I ever tried that back in the day when I was at Chase, the bondholders would just smack back at me, throw it right back in my face. How did they get that done?
They really relied on kind of a prisoner's dilemma in that there were winners and losers created in this structure. And they kind of stapled it to consent. There's no kind of rules around how long a consent can be. So they really utilized that deadline to prevent lenders from organizing. And also they, to JP Morgan's credit and to the other advisors, Evercore and Kirkland, they did provide an exchange rate that was higher than where the debt was currently trading.
Okay, I see. But
So
still,
a loss on the face value,
Yes.
but a premium to current trading
but
levels.
these are investment. This isn't junk. I mean, these bonds were investment grade, weren't they?
Yep. I mean, it kind of
Wait a
took
second.
away
Like,
the
if I'm an
protections.
investment grade bondholder, I'm not taking this deal. I've never seen anything like it.
No, neither have we. And this is kind of the concern in the market that this is
Wow.
going to be the playbook that we're going to see for more and more investment grade companies. So the distressed kind of mechanisms are coming to investment grade.
But they must be taking a victory lap right now, although we do have the European Leveraged Finance Association releasing a statement warning that the whole process was, quote, a worrying negative development. And they say that this might be coercive in nature. How are others receiving this? And will it even be a precedent given warnings with stern language like this?
Right. So they're talking about the anti-boycott language, which basically prevents lenders from kind of banding together and deciding not to take part in a new issuance. So that kind of is the first time we've seen that language. And, as we know, in the distressed land, we see a ton of so-called liability management exercises. We see groups kind of forming, locking arms together with these cooperation pacts. But this one just basically prevents lenders from, again, coming together and not partaking in a new issuance. And, eventually, JP Morgan is going to have to issue new debt. So this kind of
And what's
helps them.
Again, what was also interesting to me was this, huge bridge loan that JP Morgan did. Because I know a lot of boutique investment banks, they're really good at doing these debt restructurings and maybe taking some business away from the JP Morgans and the Goldman Sachs of the world. I guess this is JP Morgan coming back and saying, listen, we've got this big balance sheet. It can help you get deals done.
Right. And not so long ago, we reported on a story about how JP Morgan was trying to take a bite out of restructurings and LMEs, et cetera. And one thing that we were hearing is that they have the balance sheet to do so, something that boutique firms may not. So this kind of gives them more validation.
And an interesting thing in your stories, you said the whole thing was so important enough that even Jamie Dimon received updates on it. So it's not like this one little niche group risking something big. Even the CEO is kept abreast.
This went to the top. So this was a big deal for JP Morgan and its bankers, the M&A bankers, the capital markets bankers, the restructuring desks. This was
All right,
a
JP
big
Morgan and the
feather.
company may be doing a victory lap, but at some point in the next year, 2, 3, they're going to have to come back to the bond market, and these people are going to remember. And there could be a price to pay there. I know I would hold a grudge if I were a bondholder there. So anyway, great story. It got a green B, folks, and that means that it's a really, really good, cool story, and it's unique, and it's a scoopish and all those kinds of things that the journalists worry about. Rashmi Basu, thank you so much for joining us. Credit reporter for Bloomberg News. Great story. Right down my hallway. And what I did notice is JP Morgan actually was the M&A advisor on the deal coming together to put the companies together. And now they're getting paid to take them apart. That is beautiful. Looking at the markets, I mean, that's how you script it. S&P 500 up 50 points, 0.8%. The Nasdaq's up a full 1%, 200 points. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We got the U.S. stock market holding at a record. Jobs Thursday, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. The Dow, the S&P, NASDAQ all higher. Treasuries fell. The dollar rose as stronger than forecast employment growth soothes concern that the economy is poised to slow. And that is staunching speculation that the Fed will need to cut rates anytime soon. Again, stocks at a record. The S&P 500 index now higher by 49 points, up 0.8%. Very close to session highs at 62.77. We've got the Dow up 336 now, up by 0.8%. NASDAQ up 201, a gain for the NASDAQ Composite Index of 1%. Our Mag 7 index pushing higher as well, up 0.9% with the 10-year currently yielding 4.33%, the 2-year 3.86%. Gold down 0.8%, 33.30 the ounce, and West Texas Intermediate crude 66.61 a barrel. WTI down by 1.2%. FedEx double upgraded to outperform at BNP Paribas Exane, with the broker saying the stock is, quote, arguably oversold. Rival UPS, meanwhile, upgraded to neutral from underperform. All this as UPS plans to voluntarily offer buyouts to union represented delivery truck drivers as the company works to slim down its operations. Again, FedEx up 0.7% after the upgrade. UPS down 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee and Paul Sweeney were live here in our Bloomberg Interactive Brokers studio in New York City, which I would characterize as an A-plus piece of real estate. That's how the real estate people kind of grade it out. If you're A, B, C, and if you're A in New York, you're fine. The B and C are having some troubles, but I'd consider us A-plus anyway. We're streaming on the internet as well on YouTube, so check us out there. I tell you, there's a lot of news in the technology side of the business on OpenAI. OpenAI has agreed to rent a massive amount of computing power from Oracle data centers as part of its Stargate initiative, totaling about 4.5 gigawatts. I don't know what a gigawatt is, but it sounds big, of data center power in the U.S. So I have no idea what that means. And OpenAI is not, Bloomberg AI is giving me some stuff, but I need to go to the source. Anurag Rana, technology analyst for Bloomberg Intelligence. Anurag, it seems like we're seeing a lot of deals getting inked here in the tech space. This AI story is still moving along at a great pace. Talk to us about what's going on at Oracle.
Yeah, so this is something we discussed a few days ago when Oracle was up, sharply at that point. They didn't disclose the name of the client, but that seems like, as we said, it is OpenAI. This is part of the Stargate project that came out right after the president got elected at the beginning of January or the end of Jan. This is a big project. It's going to take several years to build out. It's going to be very humongous data centers across the country and perhaps even globe, where OpenAI is basically buying computing capacity from Oracle with the help of SoftBank, funding part of that particular project.
What is your sense of this deal? Because we have credit ratings S&P saying that Oracle Cloud's infrastructure building spree was straining cash flow and that the current spending pace is higher than anticipated. Is that also the view you have?
Yeah, it's going to be much higher. In fact, we think the company gave guidance of about capex of 25 billion. We think that's going to be low. It's going to be, well north of that over the long term. Over the next 3 to 5 years. Remember, just a few years ago, they were only spending about $5-6 billion a year. But frankly speaking, if you really want to play in the cloud infrastructure game or AI infrastructure game, you really need to spend the money up front in order to get those workloads down the road. Microsoft is spending, Amazon is spending, and frankly, for Oracle's, good fortune, they actually have a client who's willing to pay them ahead of time, or they have an agreement so that they can go out and build this data center and they can recognize revenue over the next few years.
Oracle will develop multiple data centers across the U.S. with partners with sites in several states under consideration, including Texas, Michigan, and Wisconsin here. Where does Oracle fit within kind of your broader AI theme, Anurag?
Yeah, just about 5 years ago, to be honest, they were pretty much absent in this game because their cloud infrastructure was there to take care of their clients only, and nobody else was renting it from them. I mean, there were certain clients, but not so big. I think the TikTok deal really made helped them out because TikTok runs on Oracle Cloud infrastructure. They gave them some credibility. They've been spending a lot of money to expand their data center footprint. I think they can afford to do that because they have a very incredible, profitable, database business where they are the market leaders.